in mutual funds also there is a fund manager who does stock picking. In PMS also there is a fund manager who does stock picking. But what is the difference in the operating configuration? That in a PMS, there are few differences. I think that what is the difference between a PMS and a mutual fund is not very well understood, right? Like, why is it that we are in the profession of offering PMS services when actually there are enough and more mutual funds that are available? I think there are, and when it comes to mutual funds or when it comes to equity investing in general, it is very well understood that one of the key determinants of the outcome that an investor will get is not just equity as an asset class. It's not just the skill of the fund manager. It's also the behavior, right? I mean, that, like I said, we like to buy great companies and hold on for 5 to 7 years, but in that there'll be 1 or 2 bad quarters where those great companies will not do well. And then you need to have the psychological strength to tide over that period and ensure that your conviction doesn't get shaken up. Now, this manifests very strongly in a mutual fund. If I give you current example, in December 2017, the entire equity mutual fund industry had a positive net flow of 27,000 crores. That was the highest ever number in a single month. In April 2019, I'm seeing that the net flow is struggling to be around, say, 2,000 crores. What it tells me is that on an aggregate, mutual fund investors were buyers in December 2017, and on an aggregate, a lot of them were actually sellers in April 2019. Now look at it this way, in a mutual fund you are investing as part of the pool. You may be a long-term investor, but somebody comes after you came and they exit well before you exited. Right? Because of people voting with their feet, the fund management activity in a mutual fund involves not only stock picking, but it involves a lot of fund flow management and reacting to the people coming in and going out. In the last 5 years, the mutual fund industry corpus has gone from 150,000 crores right up to 900,000 crores.
Right.
So 2 years back, which fund you bought, what did you see in it, why did you buy it, versus what it looks like now, how many investors it has, how many are coming and going, what kind of turnover it is causing, a different story altogether. Now see, as opposed to this, how does a PMS work? You give me money today, I have a notion of what are my best ideas, I deploy and credit stocks to your demat account. After that, 1 million people can come and 1 million people can go. You have nothing to do with it because your balance is lying in your demat account. And if market tanks like October 2018, some people might be panicking and withdrawing, whereas you might be the smart cookie who chooses to actually top up on your investment. So for people who go out, it's their demat balance which is sold and money is paid to them, and people who top up, the worth of those shares gets credited to their account. So what a PMS does, in mutual funds also there is a fund manager who does stock picking. In PMS also there is a fund manager who does stock picking. But what is the difference in the operating configuration? That in a PMS, the behavior of individuals is isolated from one another. Whereas in a mutual fund, the sum total behavior of all the people impacts the remaining investors. I think that is different. Apart from that, there are a couple of differences which are glaring, but I don't think people pay much attention to it, which is that if you invest in an equity fund, there are strong definitions of what is large cap, what is mid cap, what you can buy, what you cannot buy, what is your benchmark. You can't have more than 10% in a stock and so many things. Whereas in a PMS, we buy a mid cap in the hope that eventually some of those will become large caps. If you're not going to let me hold a stock beyond 10%, and if you're going to not let me hold a stock which crosses the investment universe, then sometimes the purpose gets defeated. So I have no favorites, but I think since we manage both with equal passion, it's at least our duty to bring out the differences. And netted, I would say that if you're a well-convinced equity investor who likes the fund manager, likes the stocks and wants to hold them for a longer period, in that case, I think PMS is a better platform. Of course, it may have more volatility and more risk associated with it. But in terms of return potential, I think the platform has the ability to deliver more.
Right. So, you represent the largest and the oldest PMS in the industry. And I agree with you that mutual funds are prone to behavioral flows.
Yeah, they are mass retail vehicles, so other people's behavior will impact.
Right. And as more and more retail investors are coming in mutual funds, obviously these vagaries of behavioral flows, which rise in rising markets and fall in falling markets, have an impact on decisions. Yes. Fund managers, decisions.
Yeah, because it's seen that people are buyers in the peak and they are sellers at the bottom. So you have to isolate behaviors.